Okay, the housing market, let me read it properly. Housing market poised for 2025 comeback as lower rates unleash pent-up demand. Hey, thank you for joining us today. It's BJ.
And Patrick.
And we're back talking all things real estate. And we just want to say Happy New Year. Welcome to the new year. If you haven't, please give us a like and a subscribe. We are putting out lots of regular content, good information about the real estate market, and some mortgage things, some government things, and I think we've said this repeatedly. We're going to give you. Well, I guess we're a little biased because we have an opinion.
We're completely unbiased politically.
I was going to say maybe we could say it this way: we are apolitical in our.
We are so apolitical. You haven't seen an apolitical channel before.
There you go. All right, so if you want to get some good information, give us a subscribe so that you don't miss anything. And we're going to get into an article today, I guess a couple of days ago. The article is from December 30th by CTV News. So I'm going to read the headline, okay? The housing market, let me read it properly. Housing market poised for 2025 comeback as lower rates unleash pent-up demand.
Nice.
Right?
Yeah.
So what does that really mean? Does that mean we all start to jump up and down and run for, like before, did you like this property? Are you ready to write an offer on it right now, or else we're going to get outbid?
Oh yeah, if we leave now, it's going to be sold to someone else. It's not COVID anymore, but you know what? There's going to be more people that are active thinking about
sure, but I don't think
making a change.
Yeah,
right.
But probably less than. It's not probably, certainly less than what we saw in COVID. So let me read a few things out of the article here. The Canadian Real Estate Association reported earlier this month. So this article is written in December, on December 30th.
They're typically notoriously late on their predictions.
Sure. So reported earlier this month, the number of homes sold in November jumped 26% year over year. So from last year. Marking the second straight month of gains at that level. For the first 11 months of the year, cumulative home sales were up 6.9% compared to 2023. So we saw a jump in those last 2 months, and certainly that last month.
Yeah. You know what makes a lot of sense? I haven't looked nationally, but locally, I think we're sitting over 2,000 listings in December.
Yeah.
Obviously it's January now, but it's unusually higher, and I haven't looked back to see I'm used to maybe 1,200 listings, right, or 1,400 listings in December.
Yeah.
So sales are up. That's great.
Yeah.
We've had that pent up demand, just like you said.
Yeah. So the big thing is first time home buyers are back and are going to continue getting into the market. So this is a quote from the RE/MAX Canada president, Christopher Alexander. We expect overall a much more robust year as far as activity goes and consumer confidence, especially with further anticipated rate decreases. Less, we're not, we're expecting it probably to be quarter point decreases now instead of half points, but that's certainly going to have an effect, and especially for the first time home buyer who is more aware of interest rates and more aware of the dollars involved, right?
And you think with it's going to be an election year,
could be an election year any time now.
We'll see what happens, right?
Yeah.
You'd think that the government would want a nice rosy situation getting into an election to show hey, look how good we're doing. The economy's booming. So, I think the numbers are going to be maybe manipulated a little bit.
Yeah, could be.
As time goes on to try to give this rosy picture. But
sure.
Yeah.
So the thing I appreciate about this is these are forecasts not from any government body.
Yeah.
So they're in theory
from Korea's
whether it's RE/MAX or TD, they're in the field. How's that? Okay. So RE/MAX's 2025 housing market outlook report said it is expecting home sales to rise in 33 of 37 Canadian regions, including increases of up to 25%, along with the national average residential price rising by 5%.
Okay.
So, that tells you that there's going to be some markets that are going to see a big increase, some markets that maybe are going to stay flat, but that average is going to get pulled up by the bigger increase, obviously. And, we've said that I think quite a bit that it's hard to project in such a geographically diverse country as Canada and such a massive country what the whole country's going to do.
Even if you just look at like the center of the universe of Toronto, like there's such a vast differences in the market. Like, like pre-construction condos compared to like single family dwellings, detached homes. You know, they're not going to behave the same in the market this year, anyways, right?
Sure.
Just, and we touched on this before, like just matter of supply, right?
All right. Alexander said the market didn't really take off after the bank's first few cuts, in part due to messaging that it expected to decrease rates even further as the months rolled along. He said that caused many would-be buyers to hold off in anticipation of more affordability. But the challenge with that strategy is at a certain point, you hit the point of no return where rates have come down, so it's a little less expensive on a monthly basis. But here it is. Sounds familiar? But then it becomes more competitive, so prices go up. We've been saying that, all along. And
it's always like this, right?
Sure. And so he's it's a very valid point. What he's saying here is, well, we'll get to another one. There's a really good one I want to get to, a quote here as well.
Okay.
So TD Home sales, forecasts sales will rise by 16% across Canada in 2025. So, they're projecting an even bigger increase than RE/MAX.
16%, okay.
So here's the one thing TD did say is it is premature to start comparing the market to 2021 and early 2022 when activity skyrocketed. The rates are still not low enough yet compared to what they were before. Affordability is improving a little bit, but qualification is still very difficult for a lot of Canadians. So house prices do need to come down a little bit to really spur a lot more of the activity. Now, here's the ones I wanted to get to. For those who find themselves on the verge of entering the market, so this is the RE/MAX representative said, waiting for the perfect time could be a risk in itself. You won't see the 2021 activity for a long time. Prices were going up almost by the day, he recalled. I don't see that happening for a long time, but my advice is always buy within your means. Timing the market usually ends up in disaster. And that's what we've been saying the whole time about timing the market and buying within your means. And I think that's really what we're talking about here is there's going to be an influx of people coming into this market, not just our market, but the market in general in Canada. And as they come on the market, what's going to happen? The demand goes up, the supply goes down, and the price is going to go up accordingly.
Yeah, I think with the lowering interest rates, that's one thing. We have a longer amortization period for purchases now, which brings down the cost. Like, it's pretty. Like, how much more incentive does a buyer or someone have to buy a house now, right?
Yeah.
And the argument against like the longer amortization, you're gonna pay for thousands and thousands more for the mortgage for interest payments, but you have options.
Yeah.
Pay it down sooner.
Yeah.
Make bi-weekly payments, make weekly payments.
Sure.
Like you can shorten that mortgage down.
Yeah.
Back to the original amount, anyways, and it's flexible still.
Yeah.
Right. So like it gives you the option of having smaller payments.
Yeah.
But then you increase your income, you have extra money, whatever the case may be. You could still take advantage of like paying down that interest or paying down the principal, so you're not paying the long interest.
Yeah.
That increased interest amount later, right?
Yeah,
so.
Absolutely. Yeah. So I mean that's I think that's a reasonable report and what everybody's had to say from the industry.
Yeah, it's fairly balanced.
I think that's a balanced report and something that is going to happen. We know that there's going to be a rebound. It's not going to be, like they've said, it's not going to be, stratospheric, that it's just taken off. But we are expecting probably a seasonal market again that I remember we went for a stretch.
Like back to normal?
Yeah, like a normal seasonal market. Like I remember 2018 on almost. It was 2018. It was ballistic, and then there was a pause,
And then COVID.
and then it just went crazy.
Yeah, but back to normal.
Back to normal. Yeah.
Pretty much, right?
So,
like, what locally for Victoria, I haven't seen the year-end number yet, but I'm expecting like we'll have less than the 10-year average.
Sure.
It was a slow start to the year,
Yeah.
and then it picked up in summer and fall and winter, of course. But I think we're still going to be under the average amount of sales, and then I think we're gonna be back to probably. If we're average or a little over average, it's going to feel like a hot market again.
Yeah.
Because we're not used to it.
Yeah, for sure.
Right?
Yeah.
We went from like supersonic highway speed,
right?
And now we're in the school zone.
Yeah.
And
yeah, that's a good.
That's
maybe,
a
good analogy. Yeah.
It feels like doing the city speed limit feels extra slow.
Yeah.
But we've been on the highway.
Yeah.
Like we're just not used to it.
Yeah.
So it's gonna be it's gonna just be back to normal.
Yeah, I would agree with that, and I think to reiterate what they're saying is, work within your means where you are right now, and not, well, I'm going to wait and then I'm going to get a better price at this point, or I'm going to wait and get something else here or there, and that's fine if you want to figure that out and that makes sense for you. But do what makes sense for you at a number that makes sense for you.
Even if you're not buying a house, like. Don't pay rent that's beyond your means. Don't have a lifestyle, luxuries, cars, whatever the case may be, right?
Yeah.
If you're living in a place where like your income doesn't match your expenses, maybe consider like a different location.
Sure. Yeah.
Or you're gonna have to start living within your means somehow.
Yeah. So. All right, well, that's it for today. Thank you for joining us. And if you haven't, give us a like and a subscribe, and we'll see you next time.
Thanks.